Hi everyone, today is Wednesday, April 27th. I'm Marv Eisen of Timeless Dollar. You're looking at the one-day chart of the S&P. I want to speak a little bit today about learning how to stop losing money in day trading. And that might seem a facetious topic because after all, losing money is part of trading, right? We all trade based on market patterns, movements, momentum, and trade setups that are based on what's occurred in the past, okay? Whatever trading school you learned your trading skills from, or you should have if you never attended a trading school or enrolled in a trading school, you learned based on what was taught to you from lessons of the past. After all, candlesticks were developed by the Japanese centuries ago. Trade setups are basically repeating market patterns that occurred in the past, and so because they repeat, you learn them and you seek to find them in the future so that you can base trades on those setups. But it's all based on learning what's occurred in the past. But there's a bigger picture to trading. What I learned and what I teach was based on how the market performed in the past. And so that brings us to today's one-day S&P candle. There's a bigger picture in looking at the past. Now, in order to make money day trading, and I specifically said if you have been losing money day trading, or basically standing still, losing some, making some, you're going to be interested in this video. Because in looking at the past, there's a much bigger picture. So look at these candles. One-day candles. What is the common element, the common characteristic of each of these candles? Okay? Some are red, some are green. I know you're going to say that. But the big picture is staring right at you. What is the common element of each of these candles is that each candle has a beginning and it has an end. Okay? Now that might seem, well, sure it has a beginning and an end. Has a top and a bottom. What else do you know about these candles, the beginning and the end? They're in different places. There's a range between them, okay? Basic, right? There's a beginning, there's a range, and there's an end. Beginning, range, and end. And so there are three elements to looking at these candles in the big picture. There's a beginning, there's a range, and there's an end. Or rather, there's a beginning, there's an end, and there's a range, a number of points between that beginning and that end. So if we can determine where the average range is, what the average range is, where it has been, and we can determine where the beginning is on a particular day, and where the end is likely to be on a particular day, now follow me here, we can take a long view of the market and trade the candle. Hard to swallow, right? Hard to swallow. I mean, there's no setup, there's no gap trade, there's no time and price, there's no support and resistance, right? But what I'm suggesting to you is the movement of candles, the formation of candles in the future is based on what happened in the recent past. And by measuring certain parameters between candles on several preceding days, we can extrapolate through an algorithm where the candle for the next day is likely to be. This takes the whole essence of trading and brings it into a much bigger picture. So let me show you the results of using this technique in actual trading. I want to show you the results of what I teach in real terms over the past 10 trading days. You're looking at the Emini chart for April 26th. And you're looking at my trading zone, and the trading zone is a calculation based on the past. I look at the past to try to determine where the market is going to go in the future. And so each evening, I do a number of very complicated and complex calculations to determine where the market is likely to go the following day. And here are my trading zone numbers for the previous 10 days, including today. Today, April 26th, my trading zone was resistance at 42.70, support down at 41.63. Prices started out up here, opened at 42.67, and traded down through my trading zone for the day. So, taking a trade at the opening of the day and staying with it all day, the trade was worth 97 points. Okay? Pretty good. Was it lucky? Let's go to the previous day, April 25th. On the previous day, my trading zone was resistance at 43.48 and support down at 42.41. Market opened over here at 42.43, and taking a trade at the open of the day and trading, of course, in the direction of my trading zone, the market closed at 42.93, good for 48 points. Lucky 2 days in a row? Let's go further. Back a further day, April 22nd. The trading zone on April 22nd required that it be transposed. And for those of you who subscribe to my trading zone service, you know what that means. Nevertheless, the trading zone for April 22nd, taking a trade at the open of the day, holding on till the end, was worth 107 points. Okay? Lucky 3 days in a row. Let's go back another day. On April 21st, my trading zone resistance up at 44.92 and support at 44.45. Market opened at 44.94, holding on through the day. Well, on this particular day, at 1 p.m., the market traversed the entirety of the trading zone, good for 50 points, but at 1 p.m. on April 21st, Jerome Powell, the chairman of the Federal Reserve, made an announcement that the May interest rate could be increased by as much as 50 basis points, sending the market into a tailspin. And had I held on, this was good for an additional 57 points, for a total of 107 points for the day. I was happy with my 50. Let's go back another day. These are consecutive trading days. April 20th. The market opened right over here at 44.78. Holding on for the day yielded a 22-point profit. These are blind trades based only on my previous day's calculation. Remember, I do these trading zones calculations the evening before. So this trading zone on April 19th, and this required transposing as well, hopping on in the beginning and holding on through the day, the trade was good for 49 points after transposing. April 18th. Starting at the beginning of the day, my trading zone support was 43.78, resistance at 44.47. Hopping on at the beginning of the day, taking a trade in the direction of the trading zone, which was long, the trade would have yielded 12 points. Not a great day, not a bad day. Thursday, April 14th. Again, the trade was good for 58 points. Just merely taking a trade, and these trades are based on just points. I'm not giving you a dollar value. We can do that later. I don't know how you trade or what you trade. But this is the Emini or the micro Emini. This trade on Thursday, April 14th, good for 58 points. Okay? And that's just making a trade in the direction of the trading zone in the morning, closing the trade in the evening at 4 p.m. Go back another day, Wednesday, April 13th. Trade at the beginning of the day, get on at 43.92 at the market open, in trading in the direction of the trading zone, which was up, getting out at the end of the day, good for 55 points. The micro Emini, if you bought one contract, that was a $275 profit. Of course, it was if you trade the Emini, good for $2,750. Okay, Let's go back another day. Tuesday, April 12th. Again, taking a trade in the direction of the trading zone and getting out at the end of the day. Good for 60 points, $300 for one micro E-mini contract, $3,000 for one E-mini contract. Okay, so those are the results of my teaching of the way I trade based on what I've learned in 20 years of trading. And these were 10 consecutive days. These are the results of what I've learned over 20 years and how I teach. If you've been trading and losing money or basically treading water, maybe you'd like to try learning from what I can teach you. I suggest that you enroll in my E-mini trading course, but let me suggest something else to you. If you were intrigued by trading the big picture based on the trading zone, subscribe to my trading zone service and you'll get my trading zone numbers each day. Try it for free for a week. Paper trade my numbers. Paper trade them and see how they work out for you. So that's my video for today, Wednesday, April 27th. Thanks so much for watching. Sorry to be a little long-winded today, but I had a point to prove and I hope I did. Trade safely. Thanks for watching. Have a great day and I'll see you in my next video.